Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, the 20th of August. Ridiculous. Summer's almost over. Taking my first sip of coffee, so bear with me. Checking out the headlines. Not much. Not much. Martusis. I used to have a member a number of years ago lived on Martusis. I believe I'm saying that right. Martusis. It's off the coast of Africa. It's a small island. I haven't even thought about this island in years. Really nice guy, too. All right, let's get through the pre market activity. Hey, Kat, good morning. So, I know the futures were getting hammered when I shut down last night. Let's see what's going on now. We'll begin NASDAQ 100. And they are still down about a third of a percentage point. I went over with members last night that I wasn't going to be shocked to see technology come in, especially the Nasdaq 100. But I did expect some. Good morning, Trish. Wow, this is a rarity. Two ladies on. So I have 5 people joining right now, with half at one point in time being female. Outstanding demographics, improving. Love it. We're a big tent here. We encourage more female participation. Shocking how the demographic is so one-sidedly male. The S&P 500 down a bit more than the Nasdaq 100. Frankly, we really need to see here. What am I doing on a 5-minute chart? Ridiculous. I think they're going to make another run. It's a horribly drawn line. It's not horizontal, but it's close. You can see where they're hitting resistance, which is at this prior peak. Let's set an up alert here. Hopefully Thinkorswim stays up today. Man, have they gotten some bad press. Hey, Pat, good morning. NY Jets, good morning. Pat, did you go to bed carrying those spider puts, or did you close everything out? NASDAQ 100. Okay. The Russell down spot 5.8%. Trying to get a feel here for the volatility. I did warn the other day on Market Wrap, not last night, but the night before, that we were seeing signs that the VIX was firming up. RSI had a daily breakout. As a matter of fact, let me show you on the chart. So this is what we're looking at on a daily basis. On Tuesday evening, we had broken out on RSI, on the VIX, pulled back, holding support. On Tuesday night, we hockey sticked up, continuation move higher on Wednesday, and you could see the price, while it hasn't followed through, will probably follow through today. So this was the market sending us a signal that we could quite possibly get a pop on the VIX. Will this sell-off have legs? I'm not necessarily in that camp right now. I think that, sure, can we get a correction? Sure. Will they let it drop into the election? I doubt it. I'm still in that school of thought. Here's the 10-year Treasury bond. It is up this morning, but I'll tell you, yesterday's sell-off does not make me a bull on bonds. I think that this bull market in bonds is under a lot of pressure. As a matter of fact, let's take a look at the yield on a weekly basis so far. I hadn't updated last night when I did Market Wrap. So you could see that we were lower on the week. We are still down on the week and we'll probably close down. However, what we're doing is, after breaking out last week, we're doing a retest on yields. I think we're going up higher here. Now I'm going to do a Thursday night stock charts live tonight, but my daughter's going back up to college, so I may do it a bit early because we like to go out fishing. This type of fishing is at night, so going out with my son. So I may go a little bit earlier. I'll go on live a little bit earlier tonight, and just so we can make the boat at around 6 o'clock, 7 o'clock, thereabouts. So we'll definitely be on tonight, but just a little bit earlier. Maybe. We'll see how the weather holds up. Cat's still waiting to purchase silver. I had a rough day yesterday. I like the retest of support, but we could see a little bit more weakness there. NY Jets. Pat, I know you've had a good week so far. The scalping short. Good for you. Congrats on that. NY Jets, I'm a little concerned with gold and gold and silver also. Yeah, I'm not. Longer term, you need to see where the dollar is going. Short term, sure, the dollar may push up higher here, but longer term, it's it's in a lot of trouble. You know, we're just barely holding on to a support level. Right now, all we're seeing is a technical bounce. This is very weak. Stokes are very weak. So I don't see a setup here for a major bull run on the dollar that'll last for any length of time. Sure, can you get your short covering rallies? The dollar is a very crowded short trade. So you're going to get short covering rallies. And I think the Fed yesterday provided a bit of a catalyst, but I don't think it's going to last. Not with all the debt that we're incurring. I mean, they're not even done with the stimulus package, and that's going to come on board. That's going to be trillions of debt. We're so far gone. And another thing with the U.S. dollar, they need inflation. You know, we had a debt to GDP back in 1945, post World War II, to finance the war. We had a similar debt to GDP. That came down by the 1980s to, I don't know, 30% GDP. But the only way that we were able to get that debt down from where it was over the course of a couple of decades was inflation. And post-Nixon, after he took the U.S. off the gold exchange, or the gold standard, the dollar dropped precipitously, inflation rallied, and our debt came down. So it was inflated away. Yes, we paid it off also, but it was inflated away. And they need a weak U.S. dollar. They need inflation to do that again. So I'm not buying this that they're long-term bullish. And that's the typical Treasury talk that we've heard for decades, bullish dollar when they're knocking it down constantly. I digress. All right, let's take a look at silver. Silver down a little over I should say just shy of 1.25%. It took it on the chin yesterday. However, the chart I like here, this is going to be of the AGQ. Pro shares. Let's bring it up. I'll show you how we close, what I was looking at. All right, so you can see we broke out of this triangle formation on the 17th, rallied, and then faded on the 18th. Now, what are we doing? We're retesting the support. Does it hold? That's the $800,000 question. I don't know. Yesterday was a pretty bloody day, and on volume, no less. So I think what we need to do is take a wait-and-see approach. Not loving the RSI, putting in lower highs, not loving Stokes' possible rollover here. So the case can be made that, sure, if you want to re-enter your trade after booking profits, you want to nibble, scratch the itch, get the satisfaction of buying back into the lower price, go for it. But I would stay very, very small right now. Wait and see how this plays out, especially with silver. It's so volatile. But this 4-hour chart, not looking bad. We had a failed breakout. So I would wait for either a retest of support or a breakout above resistance at around 27, let's call it 27 on spot silver. Where's gold? Yeah, gold popped this morning. Or overnight, I should say. Now we're weakening up yet again. Down over 1.5%. Big correction here. So we're not ready to go adding more to our gold mining trade. We haven't bought any recently on this pullback. Bitcoin took it on the chin yesterday, catching a bid now. And it broke out. So Bitcoin looking good. The dollar, it's got a foothold above a resistance level. Let's see if it closes there, or do we fade yet again, just like we did back here, back here. What else do we want to take a look at? Copper. That rally's come under pressure. Down this morning. Oil was down earlier. And it looks like it's going to go lower, as we have broken down below support, attempted to recapture it, we're being rejected. So oil under pressure this morning. Gasoline, breakout point failure, but holding firm. I want to go back to treasuries for a second, because this is what's going to drive the market. Am I thinking about any infrastructure plays? Technically, I already have one, which is U.S. Steel, but that's a quasi play on infrastructure, leaning more towards commodities. You know, if you want an infrastructure play, you could look at Quanta. That's an infrastructure play. That's PWR. I believe this is symbol. Now I have to check that out. It's been a long time. Yeah, Quanta, PWR. I'm not losing it yet. You can see it's had a nice rally, but we're pulling back a bit, topping out. So this is one of my go-tos for infrastructure plays. All right, let's do some chart requests. I think we can conclude that we're going to have a weak opening here. And what matters is how we close, right? So tonight what we'll do is we'll go over the... I don't have many requests to go over this morning. Okay. We'll go over the weekly charts, how we appear poised to close. Oh, and speaking of silver, I set an alert yesterday morning on the SILJ. That fired off yesterday. As a matter of fact, let's bring it up. It fired off. I didn't execute on it, though, because I was concerned about the volatility. And I think that we could come back down and test this lower band of support. So I'm going to create a new alert here. Excuse me. I'm going to create a new alert at the support level. This is more of a primary lower band of support. And we'll keep this active for the next 5 days or so, and we're good to go. So we closed right at support yesterday. We have a volume shelf right here. I'd like to see us pull back down to here. This is where I just set the alert. And that's at around 14, let's call it 1450 because it is a rising lower band of support. So SILJ, not ready to be bought just yet, but fairly soon, I think. All right, so we have Emilio PSTI. Therapeutic company. We'll begin as we normally do with a higher level view, monthly chart. And we have a breakout. Breakout 1, here's breakout 2 on a monthly basis. We're off the highs of the month. Not loving that. We have clear resistance above at, what was the high of the month? 1215. So the market's saying you got sellers above here. So I think what you need to do is need to get a running start. You need to pull back. You need to retest. Probably going into September. We'll keep it active for a couple of weeks, few weeks. And we'll see if we get the retest. Because you have so much resistance above. I'd like to get a pullback, good amount of distance between all the sellers up here if we decide to open up a position. Weekly chart. Here's the alert here. And we have a breakout on a weekly basis. We'll see whether or not we can hold it. You can see right up here we have an anchored VWAP. It'll be good if we manage to close above this level right here, this volume shelf. But we're not there yet. We're being rejected right at that level. So I would not go buying right now. And there you have it. So here's our trading range. We're looking for either A and or a pullback and a retest of support here, or a breakout up and through this resistance level, and more importantly, a close above that level on a weekly basis. Daily chart. Yeah, it's a chart that's developing, one that I couldn't buy just yet. Resistance above, two resistance levels. Again, volume shelf here. We need to see a close above it. That would become interesting, or pull back to support at current about 9.50. Let's see what else we got. Sam, hey, it's been a while. How you doing, buddy? You didn't short Goldman yet, Cat? How did it close yesterday? I know we spoke about it yesterday morning. Looks like I had a dead cat bounce yesterday with a little bit of selling on top of it. So it faded a bit. Still not a buy. Still weak. The only thing I would caution about is just, as I mentioned yesterday, watch these banks. They were weak yesterday. The rise in yields yesterday did not help the banks. That's why we didn't go adding more to our bank position. But I would have if the S&Ps would have held up and we would have seen a green close on the banks. But it wasn't to be. So it looks like the banks are going to trade with the rest of the market. No great shock. But if yields continue higher and we do see a recovery in this market, the place I'd be looking to go buying would be the banks, in particular, the regionals. Now, the regionals closed up yesterday. Very nice day for the regionals. This is a leveraged ETF. It was up 4%, so just be aware of that. So this is the market sending a signal here. Pat, Amazon, AMZN. So my take on Amazon is this, is that, we are now at the 20th of August and we have yet to take out last month's highs. And we're beginning to see signs of a fade on Amazon. Weekly chart. Possible. First leg of a double top. Maybe. Nothing to go shorting off of yet. Daily chart. An inside day yesterday, an inside day yesterday. The path of least resistance still remains higher here. So while it's extended on a monthly basis and we don't have a new monthly high, that doesn't mean that within the next several trading days we can't make that new monthly high. I think we need to respect it. Would I go buying here? Probably not, unless I was going to use a very tight trailing stop. I mean, we have a breakout above resistance back here, so I guess all we could do is what we like to normally do is identify our risk, where we want to get out at. And we had broken out here on the 18th, pulled back, retested yesterday. So I think that if you're so inclined to go buying the shares, do so. However, use a tight stop on a close down below 32.51 spot 66 and keep that loss very, very small. And add to it, if you're right, on a breakout above 33.35. But just keep in mind just how extended we are on price. It doesn't mean we can't go higher. I think it's quite possible we see a blow off top in this market before Election Day. The question is, who's going to lead the charge? Apple? Here we do have a new monthly high. Clearly, we gapped up. RSI at current 80.84. Very healthy chart. Very volatile week. We engulfed the entire week last week. If we close out the week with this candlestick at current slightly down in the week, it is not constructive. It's akin to a hanging man formation. They really need to be able to push this stock positive on the week. Daily chart. So on a daily basis, we have a breakout. I think we need to dance around here, do a retest, see if it holds. If you want to buy it, fine. Use a stop loss right below the support level. Obviously, we're going to open up weak this morning, probably down below that support level. Let's wait and see whether or not we get a rally to close back above it. If it does so, if we get a bullish reversal bar closing back above this support level, that's a bullish sign. That's the market saying, hey, listen, we have the rocket fuel below to bid the shares back up higher. We close green on the day. But if they don't show up, those buyers, well then, in the back of my mind is this weekly chart. I mean, to move these shares this far down to undercut last week's lows, that's a lot of selling for Apple. And then to bid them back up, that's a lot of buying. So there's a tug of war going on here, a big one. So I'd wait and see how we close out the day. I would not go buying the dip this morning. I'd be more comfortable paying up if they flash a bullish key reversal. I'd sleep better at night knowing that I have buyers below that are of like mind, willing to support the shares. Let's bring up Tesla. All right, I was asked the other day whether or not Tesla would hit 2,000. My response was, I think it's a foregone conclusion. I'm still sticking by it. Although we are extremely extended here, but logic has no business in this stock. So I would not be a shorter just yet anyway. I think that in all probability, they're going to want to see a big round number get hit. And that 2,000 mark is all too attractive. It's like a diamond jig to a barracuda. Weekly chart. Beautiful breakout. Continuation move up higher this week. all the stars are in alignment for higher highs here, except, of course, if the market gives way. And that's the only thing standing in the way of Tesla 2000. We became extended relative to the third standard deviation Bollinger Band. Yesterday, though, we were up. It's showing relative strength. Might we consolidate within this trading range with a low of 1796 being the floor of that range? I think so. I think it's quite possible. But I think if we get a breakout, we're going to 2000 fairly quickly. For Trish, Twitter. Pat, thought on Nugget or JNug puts calls. Pat, I've sworn off Nugget for reasons that you are aware of. JNug, I would be more prone because of their option premium to trade JNug. I think that I would rather be in the GDXJ versus the NUGT. And selling premium wise, I'd rather be long of JNug for selling premium puts anyway, or selling puts against JNug to average down my cost. So I prefer JNug over both. Is it time yet? I don't think so. We'll take a look at it, but I don't think so yet. Sam, I am in the organization works from home. Basically, the government will boost the economy, giving money to fix houses. So I am in that stuff right now. Yeah, Home Depot had good earnings on the home office build out. Wayfair probably benefited from that as well. So that's a good space to be in. Am I crabbing tonight? No, we have this is bluefish season. Probably on a party boat tonight, Pat. I didn't set up anything because my daughter's moving into an apartment. She's been going back and forth for the past couple of days upstate, so I wasn't quite sure when she'd be down here, and to coordinate with my son, it's difficult. So I didn't charter a boat. I just said, you know what, if we're going to go, we'll go last minute and we'll go on a party boat. We'll leave it at that. So we'll probably go for night blues, bluefish, and sea bass. Sea bass are really delicious, and bluefish are a great fight. Twitter, not a horrible chart, but I just don't like the management. I think that they have the goose that laid the golden egg with their business model, and this is not to get political, but they make their business political, and it as an investor, where I won, I would not be happy. If you lose the President of the United States as a follower on Twitter, or if they revoke their coveted liability protection because they wantonly break the law constantly. Both Twitter, Facebook, you don't argue, Google, sure. They have a license to print money, and they abuse it, and I think it's going to get taken away. And they have both both sides of the aisle that don't like them. So that's my political take on it. Or the headline risk take on it. Chart-wise, to put everything else aside, I think it's a good-looking chart. I think you have a W formation forming here, an undercut double bottom. We undercut in March, the lows of October, yet we're bouncing back. Thus far this month, we're above 38.61. I'd like to see us close above it. In fact, I'd like to see it close above this upper band of resistance. And let's call that at $39 a share. What did we close yesterday? 39.07. Let's call it 39.50. Ideally, a close above $40 per share would be really bullish. And I'm not going to be the least bit surprised running up into the election to see Twitter get bid up. Weekly chart. All right, so we have a weekly breakout above 38.61, but resistance immediately above. Again, we're so close to that key resistance level of $40 a share. That's where I'd really like to see it close above before I went in, because after that, your next resistance level is at 44.21. We're through a couple of major volume shelves. That's good to see. Daily chart. Rejected at resistance. If you wanted to nibble at support, I'd be cool with that. Loving RSI. So technically, Twitter's becoming very interesting. But I just don't like the headline risk. And with that, folks, I think that concludes this episode of Swing Trading Today. If I could ask you folks to please smash that like button and join us tonight. I may pre-record tonight, may or may not sure. Either way, I will be putting out a Thursday night Stock Charts Live where we review the health of the overall market. You're welcome, Trish. And if anything, if I decide to go live, then I'll send out an invite. Just use that link below, and you'll get alerted 15 minutes to a half hour before we go live. Everybody have a profitable trading day. I'll talk to you soon.